Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 15th of February, 2024. The time right now, 6:25 p.m. Central Time. All right, my friends, tomorrow's the second part of the dance. The first part was the beginning of the week, the CPI, which shook the market. It was only up 1/10 in the CPI, 1/10 of a percentage point. But the market looked at it that instead of inflation falling, it had given you a bleep. Now, if you get another bleep, that's a whole different ball game, and that's off the PPI. Now, the formulas that they use, let me just give you the basics. This formula doesn't look in weight, shelter cost, as much as CPI does. That's one of the big differences in the PPI. So we want to keep a close eye on it. We want to see what it does. The market broke hard. It has spent 3 days coming back up. It's within striking distance of all-time highs. And the question is, it broke, it rallied back, it's just the bounce, and the market heads down again because the Fed's going to be, what? Staying higher for longer. That would be the bearish event. If this is a weak report, does it mean that the CPI was the outlier event and that it was just a bleep, as we've heard so often, and it's going to resume itself down? These are the big questions. They are big-time questions for the market, and we will find out. Now, in tonight's report, I revisited in my full research again the commercial real estate, and I wanted to point out something. As much as we have that tsunami wave of debt coming, there are properties, banks have revalued them. The market has revalued the properties already. They're probably down anywhere from 50 to 35% in value in many areas, these commercial properties that are poorly rented out. Not every property's gone down. There are properties around the country where they're on fire. I live by Fulton Market, where Google and Salesforce and everybody's at, and you can't get space in some of these buildings. Yet where the old Chicago Board of Trade was, the building is empty. LaSalle Street, the famous street for finance, empty. And when I tell you empty, I mean there's a lot of empty spaces, and buildings, I would guess they're half full. But remember, even if you go to work 3 days a week, firms will take space, they'll rent it out as though they're, in many cases, going to be 2/3 to full. So they're signing a lease, and some of these buildings are doing well. What it's forcing is America to repurpose the buildings, upgrade the buildings if you want to stay in, or get rid of them, get a new owner in, have them figure out a way to revitalize key areas. That's what's going on. So as much as we have that, I think it's important that I mention that and give the other side of the story, because you don't have to have that collapse. The doomsday doesn't have to happen. It can be avoided, because the banks in the end don't want the keys back. They're not landlords. That's the last thing they want. If they take it, it's because they got somebody waiting in the wings that they can get rid of their debt. They're out of the picture. The current guy can't hold it. But if you're saying you take it and you hold it and you operate the building, banks are not realtors. That's not what they want to do. And not everything's with a bank. There's a lot of private equity that has money out there. So I just always like to present both sides. Although, I do think that tsunami's coming. I hope I'm wrong. I hope I'm wrong on the impact. All right. So when we look at the market, first off, you're back up to flat. This is the most unbelievable rally since October that I recall in modern times. I mean, it just hasn't looked back. And even this week with the break, you're flat on a weekly basis. If the market were to close right this minute, it would be unchanged. I mean, it's pretty amazing, all right? You've come back up to challenge these highs. Is this going to be another one of these? Remember, I pointed this out earlier in the week. I said, now take a look. You've had these breaks. They look just like that. And right now, unless this low is taken out, I said this yesterday, I'm going to repeat it. It looks like these, and you keep going up. You take out this low, the chart changes. Be the first real change. So that's what I'm looking at now to see what's going to go on. I don't think we'd have a trend going in per se in terms of the swing line. The swing line is when you connect the current price to the prior. In this case, it's a daily bar chart, the higher the low. There's 5 special rules that you use. I created it so that it was just easy. When I look at a chart, I could absolutely say the market's got higher highs, higher lows, lower highs, lower lows, or no trend with a higher high and lower low. That doesn't mean we don't visually see that the longer term trend is up, but the current for chart purposes, where you're entering, are you entering in a bull bear movement? You're entering in nothing right here. That's the thing. Even if you go straight up through this, you'd have still the lower low, higher high. Where the market can get hurt is if you start taking out today's, that's Thursday's lows. Even if you had a higher high than today, so we're in Friday's trade already, you could have an outside day down. That would then give you the problem of lower highs, lower lows coming in. So that's the defense. Where do you think the battleground, if you drop down, is? It's the 18-day average at 49.75. There's no moving averages above the market, so the Bollinger Band's the logical resistance. That comes in at a new high of 50.81. How many people were talking that at this time of the year, you'd be over 5,000 and you're talking maybe you're going to the 5,200 level? Because 50.81 doesn't sound to me like a top in a market. I can see 5,200, 5,400, just the way it works out. It'll be interesting. I think tomorrow's such an important day. Momentum-wise, we're oversold. Now you're coming back up. Now, let me show you something. Both numbers are over 80 tonight, but you can't count Friday's action. So we go to Thursday. Both numbers were over 80. The day before is the key. One of the numbers was in the 70s. You can't embed. So you cannot fix this yet to a momentum that locks in. You could as of Monday. So that is what you got to look at. Remember, we have President's Day coming up on for Monday. Futures markets will be open. They have limited sessions. Well, you want to see all that. Just get from your broker or from us. We've already sent out to all our clients the hours of the trade. All right. So when you look at it, that's the things I'd be paying attention to. Now in the NASDAQ, it's the same picture. Another one of these corrections. It's not as easy to read as the S&P, but it's here. I see this market more sideways, caught between the 18-day average to the upper Bollinger Band. In the Dow, again, we haven't gone to the Bollinger Band in a while. The market lost its bullish momentum. All the markets here went to their 18-day average and fought a battle. I'm going back in time here. Here's the NASDAQ, here's the S&P. Do you agree with that? So that's the first thing. When you get over them, you come back, and you'll hear me often say, markets like to retreat to the closest main moving average, ideally the 18-day, and that's where the battleground, getting to it's like a pinball machine. It's a reset. Okay, I corrected, boom. What next? That's the reset on the machine. When we come over to this market, the strongest chart now, makes me want to laugh, is the Russell. It is overbought as can be, but so are the other markets right now. And it's at the upper Bollinger Band, but it is the one that has come alive up here. You'd have to come all the way down to 3 days ago's lows and take that out to say, more noise. We are in a resistance zone from back here, so just be aware of that. But no, this market has caught itself on fire right now. I don't like the overbought part of it, and I certainly don't like. You have no control once that PPI comes out of what this market will do. It's going to take on a life of its own from the algorithms, so be aware of that. And it's an important report tomorrow simply because the market has decided to really focus on that. And at the end of the month, the PCE, remember, we have 29 days this February, so you've got an interesting month. All right. How will the notes and the bonds respond? Well, if you get a market that shows continued strength, higher for longer, you probably come down and challenge. Right through here again, the 100-day average. But you've been there, you've done it, and the market's not trying to challenge it. It needs to know the PPI. It already has the bearish embedded reading, which told me, and I said it last night, that meant traders are going to sell the rallies. Now, what do you do with it in front of the PPI? Support would be the 109 area, as you can see there. When you come to the 5-year note, same thing. So interest rate futures, if they lose their embedded readings, the bonds and the notes by the red lines closing over 21, it is a sign that then the CPI was an outlier event. Market's really saying, hey, inflation is coming down regardless. You get a little bit of noise, and this market doesn't have to keep adding yield onto these notes and bonds. Tomorrow's a big day. That's all I can tell you. In the dollar index, if you continue declining, look for support between 103.75, the 18-day average, to 103.81. I want you to watch this closely. Tomorrow, again, is a huge day in this. You could get what's called the bullish crossover, where the 18-day average gets over the 100, and then you, in theory, you should go up and make new highs with the bullish crossover. I always look for the most recent high in a market, and if you get the crossover, that is a natural target for the market, that number. It does have the Bollinger Band there, but that would mean something. If the dollar's going up, it probably means that the market thinks higher for longer on interest rates. I don't know. We'll find out. We then look at the euro, and the euro has had a bearish crossover where the 18-day average got under the 100. The market, as you can see, has just recently done that. That means this is your target. It was an oversold market and still is. It's getting a little bit of a bounce there. It, like all the other things, are waiting for that PPI report tomorrow. In the British pound, I was reading the commentary from Mr. Bailey of his interviews recently, the head of the Bank of England, and there's just total confusion. The bank wants to lower rates. It needs some of these pressures to just slip away, wage pressures, inflation pressures, but this market thinks the bank is getting ready to do so. And the first banks, my interpretation at least, the first banks right now that start ready to cut will be the weakest currency. Eventually, they'll become the strong ones as the U.S. will stay too long and people will say, they're ahead of us because they've dropped rates, their economies are going to pick up. So you have to understand that there's a slip slide that goes into these. But right now, I don't see a trend. I see a higher high and lower low in a battle at the 200-day average in the Bollinger Band for support in the market. Bitcoin. All right, you had too many days up and over the upper Bollinger Band, and all you're doing is slip sliding to the right-hand side. You did it on the close today. You still have an embedded reading. I contend that the pros are going to buy this break. You heard me. They're going to buy it. Even up here, they're looking for higher prices. This is not how you typically end this type of run, and that's because you're embedded. So I'm looking for them to do that and still for higher highs to be coming out of that. We then take a look at the differential between Brent and WTI crude. Now, the IEA did come out today, and as I thought could happen, they have taken the complete opposite view of OPEC. They don't see the Chinese growth the way that OPEC does. They see interest rates staying higher for longer and hurting demand, and they are looking for not quite the production that we had before. They still think Guyana, they think Brazil, the United States, we're going to be the big producers of it. But the question is, how much more production? And they're trailing that back a little bit. I'm giving you the gist of what they said. Now, the big event, obviously, that's affecting oil, and it's one of the big events, is the war in the Mideast. That hasn't changed. It's, if anything, picked up a little bit worse between the Hezbollah and Israel. They are firing more missiles at each other. More deaths are occurring. The world pressure is on Israel. They want Israel to find a way to end this, and what is the end game? And I mean, when you see it on TV, you understand how many months of this is going to go on, and everybody understands that. I understand the Israeli position completely. I think I understand the Palestinian position completely. I don't understand the Hamas position at all. There's a very big difference there. In the Brent, well, you came down to major support today. How often do we talk about that? Where's that 18-day average, that line in the sand? So you have a market that's holding the lows there, giving you the bounce. You are overbought. WTI Same identical thing. Fell right back into the support, gave you the bounce, which is interesting as can be out of the market. You're overbought in both. I'd be very careful. If today's lows are violated in either of those, could be a real problem for the market. It'll put them under those averages at the end of the week. That would weight the market in a certain way, especially on a weekly chart, so you want to pay attention to that. Gasoline came down, found its support right where it should, the 18-day average. How often do you hear me tell you about that? And once you had that bullish crossover, the 18 against all this, you went up, you made your new highs. That's that crossovers that I was talking about earlier. You are overbought. There's divergence on this market. While you've come up here, you're in a funny area right now. But, I look at the market and say, okay, spring driving's not far away. And as that driving goes, we're already February 15th. People in April, some people start their vacation time. It's Easter. Remember, it's not far away. All right, natural gas. I'm reading stories today, and people are reading this, and they're trying to make up that the market is now giving bottoming signals. And I'm looking at the chart, and I'm going, okay. I can see it wants to get to the right-hand side of the Bollinger Band. Must be an algo that internally is looking at something, because I don't see it. I don't see it at all. That doesn't mean I tell you on this prolonged break where you just came from the 260s down to 152, hey, just go in and get short. Where's your stop going to be? I mean, sometimes you have to, when these things happen, you have to walk away from a chart. You don't have to trade natural gas. That's my point. Where would you put a stop? Everything in trading should be, if I'm wrong, how do I get out and save my account? We all know we want to be right. So it's getting ahead of yourself. Well, I don't want you to get too far ahead of yourself. I want you to join me this coming Thursday. Now, here's how you do that. At the very top up here, move your cursor. You'll see an icon. Give it a click. That will take you to the form that you have to fill out. Once you fill out the form, you'll get an email from us. It'll have your user ID and your password. The webinar is next Thursday. That's the 22nd, 12:30 p.m. Central Time. I open up the chat room, the webinar, if you will, at 12:15, so you can get yourself in there, make sure the voice is working, everything you need. You'll hear the sound and all. It's 20 minutes long. Clear your desk, whatever you got to do, you'll be done in 20 minutes. I do not tape it for you to see. I tape it for regulatory purposes, but I refuse to put it out on the website because what I learned a long time ago, then everybody just goes look at it on the website. But the fun of it, it's not a presentation. I do special reports that way. This is interaction. And if you're not going to be in it, I don't want to have the interaction. It's that simple. I'd rather not do it. If you can't, for any reason, get up here to do that, call my staff, 866-973-2077. They will get the invite out to you. If I'm on my mailing list, I've already sent them out this morning. If you don't see it and you know you're on the list, check your spam. If you hit unsubscribe to our mailing list, you're never going to get it, all right? Because you hit the unsubscribe, it's not leaving the server. Then you got to call again and work that out. Does that make sense to you? I hope so. I'm Ira. You have yourself a good day. I'll see you with the PPI tomorrow morning. All right, we'll discuss it. I'll put out the update probably close to 8 p.m. On the dot, so we really get the fresh information from that. You take care.